Guys, thanks for checking out the recording of our Bridging the Gap workshop. There's a link in the description box below if you want to register. Some of the benefits of doing so is one, you get notified when we go live and you can join us live, ask lots of questions and participate. Two, you get put in the running for the over $3,000 of giveaways that we'll be offering each and every day during the event.
All right, guys, welcome back. This is session 2 of day 2. Can you believe it's only day 2? We've been through so much already. We've covered so much ground, and we've got we've done Monday, Tuesday. We're not even halfway through Tuesday's session. Then we've got Wednesday, and we've got Thursday, and a dedicated Q&A on Friday, and there's a meetup on Saturday. So it's a full-blown tier 1 trading bonanza this week. But with the amount of ground we've covered already, I just can't believe it's only like day 2. So hopefully you're all getting value. As I say, about 225, I think it is now, have filled in the trader assessment. So that was good. Good to hear that you got a lot from that. Everyone hear me? Just do a quick double check, sound check whilst before I carry on. There's been times in the live room where I've spoken to myself for about 10 minutes. Good stuff. Okay. So I'm going to actually, I kind of want to bring on the camera. I got very, very good internet here. The reason I want to bring on the camera is because I want to kind of connect with you a little bit more here, because that was a very, very practical session. If you guys find that it's causing an issue with the stream, then let me know. But I want to run it because that was a very practical session with Akil now. Now what I want to do is I just want to rein it back and go through some key pointers, all right, for note-taking on what makes up a very, very profitable trading strategy, okay? And then what I want to do is I want to go back into practical mode, and I want to be able to then walk you through the rules of engagement of a strategy, which will completely open your eyes to how you can really make money trading numerous different ways. And then what I want to do is I want to go out onto the live markets, and I want to show you some examples. We're going to go out. I haven't even seen any live examples, so nothing here is pre-researched. I'm just going to literally click on some charts. We're going to go out to the markets and see if we can spot some examples of the trade setups that I'm going to share with you. So if that sounds good, we're going to get stuck straight in. As I say, keep the questions rolling in here. I've got my coffee on hand, which is the main thing. Let me know if there's any problems with streaming. I do want to keep the camera going though, because this is going to be more of a kind of a note-taking session, this one. I want to be able to connect with you a bit clearer, and I want to speak to you. So the anatomy of trading. First thing I want to talk about is just touching on, kind of rounding off what Akil said, because we've been over structure, we've been over price action, we've been over putting it together a little bit. But we've also touched on the importance of the gaps, okay, and identifying the critical gaps. And one of the common things is the focus for trading, all right? And what we've found working with thousands of traders is the focus seems to go in one direction or the other. So the first thing that traders normally focus on is just the tools, okay? So how many people here have just got into trading focusing on an app? And that's the first thing. Oh, what trading app should I get? And what trading app should I download? That's a very, very common thing. That's the first thing that most retail traders think about, especially since early 2020, or actually late 2019, when we saw an influx of retail traders into the space, and then it just rocketed through COVID. And then towards the end of COVID, it tailed wind off because of all the people just getting burnt. They realized that actually there's a bit more to this. Okay, it's not the way forward. So I'm not saying that the tools aren't important. Trading platforms and all the rest of it are very, very important, but this is just one focus that people have that causes them to then just be tunnel visioned. and they're missing the other elements that are important. The other thing is a strategy. So as Akil just said, he just went for a handful of strategies there. There's people who just search for strategies. I said this on day one. I said, look, don't mistake a trade plan for a trading strategy. If you do that, what's going to happen is you're just going to have a strategy, and as Akil just said, you can give two people the same strategy. One will earn money and one won't. All right. And I've spoken to many. When I was in New York speaking to Adam Grimes, he was telling me that is exactly what was doing with his two clients that he had at one time. He had them both trading the same strategy. One was winning money, one was losing money. One actually turned 50 grand into 500 grand and then lost it and lost about 200 grand. And then the other guy just couldn't make it work at all. So it doesn't matter about the strategy on its own. The strategy on its own isn't going to give you what the edge is, all right? And then the other thing is the community. Some people just search for communities. Now, I work with a couple of guys who just, they got swept up in that whole signal service thing. They were on Twitter, looking at people telling them to buy and sell. There's crypto communities on YouTube and all the rest of it. Whether you're on TradingView and all those forums, there are people that just approach trading that way. So they just approach communities and say, what shall I buy and what shall I sell? Now, other than that, there's not really any other way. There's nothing else missing there that any other traders go to. It's pretty much, that's it. It's a community of some kind, whether that's an education community, it's a strategy that they're after, and they need some tools to be able to do that. The problem is, if you just focus on the tools, what you find is you might have the tools and the strategy, but without the community, it's very difficult to have discipline. Without people around you, without like-minded people around you, it's very, very difficult to develop discipline, okay? Because even if you have a real good strategy, I mean, Akil was talking about this with a pound Aussie trade that I remember very clearly, me and him messaging on Skype about 4 or 5 years ago. It was about 305 pip trade. If we didn't have that bounce off one another, who knows? I'm not saying that we would have done anything or broke the rules or whatever, but it was a bit of accountability that was there, and you don't get that. And when you're hitting winning streaks and you're feeling a little bit cocky, there's no one around you to, stop shooting from the hip, because that tends to be what you do when you get a bit cocky. You start thinking you know what the market's going to do. On the other hand, when you're going through really losing streaks, there's no one to prop you up, okay? So that's when you slip into the revenge trading, forcing trades, trying to make the money back, and of course, that never ends well as well. So you understand that, right? Now, if you've got the tools and you've got the app and you've got the Robinhood and you've got the Coinbase or whatever you're trading from, and you've got the community, like a lot of crypto people, right? They go into the crypto and they are surrounded by people. So they've got the community and they've got the app, and they're going, right, download Webull or download Robinhood, and you can trade for free, right? How many people have heard that? Crypto Chris. Yeah, of course. And they normally come hand in hand. Those two. So without the strategy, without you actually knowing what you're doing, you've got absolutely no edge, because the moment that you stop listening or taking signals or whatever it might be, you've got nothing. You've got absolutely nothing. So there's a problem there as well. And then obviously, finally, if you've got the strategy and you've got the community, right? But you haven't got the tools, and you're jumping ship, and you're not tracking your system, and you're not journaling your trades, and you're not doing any money management or tweaking or optimization, you're not going to have any consistency, okay? You're going to end up consistent. The only consistency you'll have is you'll end up losing money or breaking even. That'll be very, very consistent. All right? So what we want to talk about is the sweet spot of having them all. And this should be the focus. You need to appreciate, you need a bit of it all, okay, to have the consistently profitable trader mindset, an approach, and system, and inevitably develop an edge. So that's what I want to talk a little bit about, and I want to talk about what is important. And I want to touch on this whole trade plan thing. I want to come back to this because we're going to be talking about what makes up a profitable trading strategy, from all the different elements, from risk reward to strike rate, and we're going to go into positive expectancy and money management a bit later in the sessions tomorrow probably. But we're going to really go into a strategy development today. All right, and before I do that, I want to touch on the trade plan, because a lot of you are asking, well, okay, now I know a trade plan isn't just a trading strategy. What needs to be in a trade plan as well, and what needs to go into a trading strategy, and what's the difference? So there's a trading plan sample here. Actually, we like to give this away to you guys as well. So we're going to give this away. I don't know if Darren's got the link for this particular trade plan handy. I'm pretty sure he can dig it out, but we'll give this to you guys, and you can go and fill this in as a template. All right, so start getting the cogs turning on all of the gaps missing in your trade plan, and you can start with this. So trading affirmations, obviously trading routines and rituals, are really the times of day you're trading, what markets you're trading, how long you spend trading, when you trade, when you stop trading, when you don't trade, all the rest of it, okay? And we're going to go through the actual rules of engagement in detail during this session, as I say, and then I'm going to show you an exact strategy, and then I'm going to go out to the live markets and show you some real examples. So take some notes here, because I'm going to be talking about really what is important, and there's going to be a gap here for you, and I'm going to go through a ton of gaps that you might have in your trading, and you want to take note of each of these and why. This is why I wanted to have the camera on, because I didn't want to just have the word consistency here. I want to be talking to you guys. So consistency is the key. All right, now I can't stress the importance of this, and I'm not just talking about you place your trades at a consistent time. I'm talking about building a habit of consistency from day one. So how many people are actually learning to trade here? And this is like, you're early on in your stage of trading, of your trading development. How many people appreciate the camera, Jason? No worries, Jane. How many people are actually learning to trade? Right, okay, quite a few of you. So when it comes to consistency, what I would say is start forming consistency and the habit of consistency right now. And that means dedicate a certain amount of time and a certain time of day to learning. Build everything off of consistency. So set 10 p.m. as your trading time, or 8 a.m. as your trading time, or 6:30 a.m. as your trading time. And you might have multiple times per day, but stick to that and put it in your calendar and don't deviate from it. That is going to pay you dividends, I'm telling you, because as soon as you start to evolve as a trader, and you start to develop systems, and you start testing, and you start trading markets, that is already going to be there. And it's going to be trading time, trading time, trading time. And you're going to feel like you're clocking in and clocking out, which is that from a human evolutional standpoint, from an industrial age standpoint, is so what we're used to, isn't it? So why do you want to try and pull away from something you're used to and make it hard on yourself when you can actually form a similar habit to clocking in, clocking out, but dedicate it to your trading? So really, really important. And also consistency is going to be about your trading, right? Okay, so if you are trading, consistency is key. You need to be not deviating from your plan. I'm going to go through this again on tomorrow or Thursday about reviewing and all the rest of it, and tweaking and optimization. But consistency is absolute key. All right, now the next thing, get real. I always say get real. What I mean here is, did you do your assessment? Did you do your self-review? Have you identified your weak spots? Have you identified things that are missing? Have you got some realistic expectations in terms of goals and any hurdles or setbacks that might get in your way? Have you preempted that so that it's there, so it's very real, and it doesn't come and bite you, and it doesn't sideswipe you and, pull the rug from under you? The more real you can be about your approach and level-headed, and you've neutralized kind of fantasies and fears and phobias and all that kind of stuff, The more neutral you are, the more balanced you're going to be, the more poised you're going to be, and the more realistic you're going to be. All right, so you want to be doing that as well. Now, I can tell you what I plan on doing throughout this session is giving you some pointers as I go as well. And I'm going to tell you that if you're just new to trading, it is going to take you 12 to 18 months to learn to trade. All right, until you're trading a profitable system, and that could be a minimum. All right, now for over high achievers, that's going to be a real good run rate. I can tell you that now. 12 to 18 months for the average retail trader, because they've got other stuff going on, is going to be 12 to 18 months. So get real about that. Get real about that. Get real about how much money you're going to need to make from trading, or not have a monetary goal, which would be even better. Think about a percentage-based goal, or just getting better each month or better each year after that. But get real about your goals, okay? Understanding my weak spot, says Neil. Excellent. The next thing is, don't skip the basics. Now, we've been over some of the basics. We've been over some. I'm going to go through a little bit more just as I introduce you to this strategy in a moment. But don't skip the basics. And I'm not talking about like downloading a trading app. That's not the basics. I'm not talking about joining a Pip Daddy forum. That's not the basics. Okay. Chris Daly says, what if trading is your only focus and you don't have a full-time job? That is the caveat, Chris. We had 3 traders funded this year, and the caveat to my statement that, you know, it's going to take you 12 to 18 months is there's normally people who don't have any dependents, they have little overheads, maybe they live at home with their parents, they've got very low living costs, they are focused, they've got a lot of time on their hands, and they're gunning it 5, 6, 10, 20 hours a day. Those people are going to make progress a lot quicker, obviously. The other people that make progress quickly are people that have got their own business, they've got surplus cash, they've got a bit of time, they can make progress quickly. But on average, people have got stuff going on. And before you know it, how quickly does 6 months go? How quickly does a year go? Yeah, let's be realistic. Bloody hell, it was a year ago, like, what? It's August. We're nearly in mid-August. It's like that. It's like that. Honestly, it's so quick, and it's much quicker than you think. COVID started in March 2020. That was a year and 4 months ago. A year and 5 months ago. Crazy. I remember it was literally yesterday. So next things, don't skip the basics, and I'm talking about understanding what Forex is, okay? How it works, what the markets are, what the base currencies are, and the terms currency, and what the pips value represent, and the lot sizes, and order placement, and order flow, all that kind of stuff. Just basic stuff that you need to understand. If you skip that, it's gonna hinder you later on down the line. But the next step is don't learn everything, because I show this chart all the time and I see many people go on and they think, right, I've got to go and learn baby pips. Who's learnt baby pips? Yeah, I bet that was a headache. You go to babypips.com and I can tell you it's a great resource. It's an encyclopedia, okay? But imagine trying to learn the English language by reading the Oxford Dictionary. How far do you think you'd get? Because that's about the relevance. That's about the same approach. Trying to learn the English language by reading the Oxford Dictionary. You won't be able to string a sentence together. You won't be able to hold a conversation. You won't have an edge. You'll just know a ton of words. And it's very similar. Okay, so be careful how much you take in. Just learn enough to progress. And what I mean by that is it should feel right so that you've got something to go, okay, I can move on, and keep making progress towards trading live. All right, never, if you start getting to the point where you feel, God, I'm just overwhelmed. Like that told me to do this, that told me to do this. Now I don't know what to do. You've learnt too much. You're trying to learn too much. All right. Next thing's know your personality. We're going to be talking about how we build a strategy now. So know your personality. I kind of created something called the triad of personality when it comes to trading. And it's all down to 3 things. It's down to your risk reward profile, the strike rate, how often you're right over how often you're wrong, and the amount of opportunities you get. Those things are what you need to consider in terms of personality. Because a lot of people say to me, well, what do you mean it needs to suit my personality? You know, what does it mean? What do you mean you need to suit my personality and my trading strategy? Well, some people like a lot of opportunity, and that just soothes something in them. Who here likes to have a lot of opportunity, and who here is happy just having one, you know, sitting there, one a day, one a week? There's going to be different types of people. I promise you. There's going to be different types of people. One a week, good. I like more trades in 1 week. I don't know yet. Right, so you're going to know. You're going to know. And a lot of that stems from the industrial approach of work. Exchanging time for money, clocking in, clocking out, feeling like you're doing your worth, okay? And you need to feel busy. There's nothing wrong with that. A lot of people just have that in them because it's been stamped into them for the last 100, 200 years of evolution, okay? So there's that. Now, the other thing is the strike rate, which means some people are happy to be wrong more than they're right. Some people like being right more than they're wrong. And that really boils down to the third thing in the triad, which is the risk reward profile, because you can afford to be wrong more than you're right if you've got a great reward to risk. And I'm going to show you a little diagram here just to kind of reinforce this, because this was something, this is kind of this is an image that I developed based on some analysis and some conversations that I had with S&B Capital. And I wanted to figure out where most traders sat, okay? Because there's a lot of people think you can be right 100% of the time. Some people think you can be right, you know, you can have free 5 to 1 on every single trade. Now, that's not where most traders sit. That's not where most profitable traders sit. They sit somewhere in the middle. So if you're looking at this diagram here, if you're a 50-50 trader and you're getting a 1-to-1, you're not quite profitable, are you? Because you're right 50% of the time and you're only getting a 1-to-1, that means you're just going to break even over time. But if you just dip into this little triangle here, which is where most traders fit, you're going to start generating profit. Because if you're 52% of the time right and you've got a 1-to-1, guess what? You're going to be profitable. Or if you're 50% right, but you're 1.15 to 1, you're going to be profitable. Make sense? So you want to focus on being somewhere in this triangle and not shoot for the unicorns that are out here, because that's unsustainable. And although it's profitable, it's very unrealistic, very unlikely. So you want to be focused, rein it in and focus in on here. Now, that absolutely doesn't mean that you should limit your goals and what you go for and how you optimize your system to push more profits out of the market and shoot for extensions on multiple target taking and all the rest of it. You can absolutely do that, and there's no limit to what you can earn. But for initial target taking and as a trader, remember, we're buying and selling here. We're getting in and out to seek other opportunities. Think about that and think about where you sit in there and what that suits on your personality. You're okay being wrong more than you're right, and there's some expectations for you there in that little table. Cool. You can also do personality tests. We always recommend doing a personality test. 16personalities.com is a good one. There's many others. I work with a lady called Lucy J. Barkus who does a phenomenal one. It's a paid one, but it's very in-depth, and that's a great one as well. So the next thing is make it easy. I talk about this all the time, but it's really just about making it easy on yourself, you know, making sure that you're not setting yourself up for failure. And I always give the kind of the example, if you're trying to lose weight and you know you've got to eat all this healthy food, and it means you've got to change all your diet, and you've got to do all the you've got to make all the salads and all the rest of it. Whereas if you just went and bought pre-packaged salads, they're all there, they're all done, you haven't got to do anything, and it's there, right? So it makes it easy on yourself. So make it easy. And another thing that's to do with making it easy is your consistency and when you try to approach the market. So as I said, start with consistency. If you can only check the charts twice a day or once a day, you only want to think about the daily time frames. All right. If you can check more, if you can check 4 times a day plus, then you can consider 4 hour. But I wouldn't consider anything lower than the hourly unless unless you've got all the time in the world and you can not break that consistency throughout the day. So bear that in mind as well. The next thing, which we're going to go into detail on now, is learning a strategy. And you might wonder why this is point 7. Because the strategy isn't everything. As I just said at the beginning of this, the strategy isn't everything. There's so much more to it. The strategy is the tiny piece that makes up one of the pieces of many in your trading. So learn a strategy. And when I say learn a strategy, I'm talking about know it back to front. Okay? Understand the ins and outs of that thing so that if anyone asks you a question on it, within 3 seconds you can answer. You want to know it that well. And obviously you want to find it to have a positive expectancy as well, which we're going to be going over later in the boot camp, and what that means and how you do that. But learn a strategy. You obviously have to learn a strategy. Learn how the markets move to improve the strategy. Now, a lot of people won't bother learning how markets move and learn the breathing patterns of the market, but I can tell you that this will really help your edge in your strategy. Now, if you're a pattern trader or bat patterns and all that kind of stuff, then you may not consider learning how the market moves, but I'm telling you, it will still be beneficial to you. It will be beneficial to you. There might be times where you think, well, we're in such a strong bullish trend right now, I don't really want to take a bearish bat pattern. Okay, so you don't take the bearish bat patterns. And guess what? Because you know how to identify the direction of the market and how to identify the volume and the strength of the trend, that might have a differentiating factor on how you place trades, which will then have a beneficial impact on your trading results, hopefully. Okay? So we are very, very thoroughly technical based traders. I recommend understanding support and resistance and technical based trading. I showed you guys this cheat sheet. This is the Wall Street cheat sheet based on the psychology in the markets from an IPO. It's also very similar with ICOs, but you can see this is God knows how old this this sheet is, but this is Bitcoin. Okay, so look, very, very close, very predictable. Very, very predictable. And if we can predict market psychology through technical analysis, that's a very, very powerful thing to be able to do. So understanding how the markets move are going to give you an edge in so much more than just so much more than just your strategy even. If you're an investor, it's going to pay you there. Fascinating, eh? Yeah, right. Yep. And this isn't just, you can look at multiple markets. This is Bitcoin. This was 2017, 2018. It's and this wasn't even created for crypto. It's very, very similar. Okay. Next thing is know when not to trade. So if you're thinking about adding these notes into your trade plan, when don't you trade? Okay, when is a bad time to trade? Is it news? Is it news? Is it high impact news releases? Is it emotion? Is it technical problems? Is it like when can't you trade and when can you start trading again? And what do you do when you can't trade? Okay. Some of you guys use Forex Factory Calendar. If you're not interested in fundamentals at all, Twitter's a great resource, but another great resource is Forex Factory. If you're just glazing over the high impact news releases and learning a little bit about what they mean and you want to start tracking how they move the markets, Forex Factory has some great little explanations and tool tips there that you can use to do that. So what I want to talk about now is organizing the chaos, because this is a mess, right? And it doesn't always look this pretty, believe you me. It doesn't look this pretty at all. And it doesn't always look this pretty and predictable like the Wall Street cheat sheet, don't get me wrong. So what we want to do now is talk about what makes up, now you know that we need a good reward to risk or to suit your personality, and we need, a good strike rate depending on your reward to risk, and you need all these kind of elements to your trading, and you know kind of where you need to sit. Now we're going to talk about a trading strategy, all right? And before I get stuck into the actual rules of engagement of a strategy, what I want to do is I want to talk you through a little process that's going to help you maintain consistency in your trading. And Akhil's obviously touched on it already slightly, but I want to talk about what we call the IPDE, which is identify, predict, decide, execute. You've probably heard us say this a million times. Those of you guys who are tier 1 traders, you can probably recite what I'm about to say, or you can probably mouth what I'm about to say as I say it, because we say it so many times. And that's the point. As Akhil mentioned at the start of his session there, we don't change the universal, the underlying message of trading, because that's one thing that's got us this reputation. If you can go back 6-7 years, watch our YouTube videos, we're saying the same thing, literally the same thing. If there's people out there changing their message, that is a warning sign that they're going where the money is, where the emotion is. If people are saying the same message, it's universal. It stood the test of time. And it's the same way that I would advise anyone invests in any stock. Do I understand the message? Is it clear? Do I get the product? Do I use it myself? Will they be doing the same thing in 10 years' time? It's a great qualitative question to ask yourself when you're investing in the best stocks. Will they likely be doing this? Were they doing this 10 years ago? Will they be doing it in 10 years' time? Great question. Helps you stay balanced, helps you stay focused, helps you have the confidence. And that's what we strive to do here. So IPDE, identify, predict, decide, execute. I want to talk you through the purpose of each of these. The first thing is the identify phase, which is the bigger picture. So let's just say you're looking for a trading setup. We want to form a bias and make a prediction on a bigger picture. All right? For no other reason than it sets our mind in a consistent phase of the market and direction of the market that we can now align strategies and opportunities to, so that we don't then become paralyzed by all the other opportunities out there. Let me tell you this. There is probably some signal in the market that will tell you to buy and tell you to sell at any given time. If you look closely enough, when you're dropping down all the other time frames, you can find a reason to enter a trade, long or short, at any given time. You can convince yourself that the market's going up or down at any time. I promise. I promise you. All right? So the reason we do this process is because it allows us to maintain consistency in a very subjective market. So we remain objective and consistent in a subjective market. Make sense so far? Cool. So the identify is a process of you opening your charts, maybe looking at a higher time frame, a bigger picture, and looking at what's going on a macro view. The next one is the predict, which is the near future, the opportunities that you're going to, let me give you an example. Let's just say that you went into a surgery and there's a surgeon. Surgeons, if they're operating on someone and doing heart surgery, they're thinking about what they're doing at that time, but they're not they might be thinking, oh, well, we can innovate this surgery somehow in years down the line. But if they stopped what they were doing right there and then and started innovating and thinking longer term, that's not going to work, right? What they're doing is they're thinking about innovating longer term. Then they're doing a procedure and an operation with that in mind. And that's helping them do the procedure even better. So a little bit of a tangent and a little bit of a kind of far-fetched analogy there, but it's the same thing. We don't want to be thinking as investors. We want to be thinking long enough into the future to form a macro view, and then we want to be looking at opportunities that are there right now so that we can get in and out of the market and make money, okay? Because that's the whole point. And then there's the decide. So this is when the rules of engagement are met. And the rules of engagement have to be so clear. So clear. Step by step, no ambiguity, no subjectivity. They have to be very objective, very consistent, and the same every single time. And if they're not the same every single time, you have to have a rule as to why they're not the same every time. All right, and we'll go through some of that as well. And then the entry rules, the execution. Okay, so the execution is the order placement, how you get in, where your stop loss goes, where your target goes, and how consistent that is. So just to kind of run through each one, identify is the bias, the market, the thesis, the prediction, where price is likely to go and how it's likely to get there. It's the phase identification. So are we in a run or are we in a pullback? And then also you might use some preferred analysis. And I call preferred analysis like filters, indicators, confluence, RSI, ATR. Lots of people use ATR. You might use structure. You might use pivot zones. You might use price points. You might use even handle numbers. All of those qualitative measures are going to play into how you get involved. And then obviously your entry criteria is how and when you pull the trigger. All right. And remember, we're looking to be in this little zone right here. Right here, okay? Don't know if you can see my mouse actually. Maybe. All right. So what I want to go over is the strategy rules, risk rules, emergency rules. We're not going to go too much into trade plan, emergency rules and routine rules. What and when we're going to go through, but I want to talk to you about the specific strategy. Now, has anyone got any questions before we get stuck in to this particular section? I'm going to go through the rules of engagement here. You're definitely going to want to take some notes. In fact, what I think we'll do is we'll just have a couple of questions here now. If you guys want to share anything, we'll do that. And then we'll take a break before I go into the next bit because I'm about 5 minutes early, but I would rather cut it so it's clean cut. And then we can get into the strategy and the live examples of the strategy straight after. Chris says, I'll be watching this again later. Very helpful. Great. Does everything make sense? Is anyone contesting anything? Is anyone arguing against anything or doubting anything? Let us know. As I say, we try and talk from universal standpoints. Even for people, time on their hands, there's so many hurdles to overcome. Learning to trade is easy, but getting your psychology right may take a long time. Getting your trade plan down in a format you're happy with is a hurdle. Writing your rules is a massive and can take a long time. Backtesting can take a long time. Putting an education plan together can take a long time. Don't underestimate the commitment needed. I would argue 12 to 18 months is an absolute minimum, depending on you as a person, support structure. Absolutely, Rob. And we've seen your journey from scratch. Great advice. Is it good to have many rules or few rules? That's going to depend on the simplicity or complexity of your system. So the more objectivity that you introduce into your system is going to depend on how many opportunities you get, the time frame you trade, the different amount of markets you trade, the amount of strategies you trade. But in one strategy, the amount of rules is going to depend on the simplicity of that system, which I'm going to go through in just a moment. Can there be too many? There can't be too many rules. Look, anything that you're not sure of, that you need a rule for. And one thing I want to stress here is a lot of people think there's wrong and right rules. The rules are there to maintain consistency initially. And then if you find your system to not be profitable, the rule is then can be changed. Does that make sense? But you have to start somewhere. It's a chicken and egg. It's a chicken and egg. You have to have a rule so that you know what to do, the same every time. And then if you find that not to be profitable, then you can change the rule or tweak the rule. But you still have to have the rule there. Because the rule, if the rule isn't there, you've got an emotional decision to make, which may be different day to day depending on your chemical imbalance. You know, based on your hormones, based on what argument you've just had, based on if it's sunny or raining. So, very important. This is so helpful. Thank you so much. We'll be watching this a few times. Excellent. Rob nailed it. He certainly did. So even if you have a rules-based strategy, your overall skill of reading a price chart will play a big part in your results. I would say yes, because the moment you learn any strategy, your edge will start to deteriorate. So then it's up to you to develop a system. The best traders in the world don't take a strategy and go and trade it. They learn how to trade and how to develop a system. That's when they become profitable. Jason, you can definitely add too many rules filters to the points that you never have qualified setups. Yes, yeah, absolutely. Okay, what we're going to do then is we'll take 10 minutes on the clock, grab a drink, definitely get a new piece of paper and a pen. We're going to be going through the rules of engagement into a strategy. And again, I want you guys to follow along and not take everything as gospel. Don't think I'm going to go and trade this strategy right away. Look at the process. Look at the kind of overarching approach to strategy development. And then we're going to go and look at some live examples. And then if you've got any questions at the end, we'll answer them then, okay?